Assalamualaikum warahmatullahi wabarakatuh. We from Group 2 will present our assignment titled Shariah Screening Methodology. Before our presentation start, I would like to advise to all of you to use headphone or earphone to listen very clearly.
This slide prepared for Ms. Nurul Ain binti Muhammad and prepared by firstly Afika Nabila binti Mahadi, secondly Nur Alia Suada binti Zainurin, and thirdly Nur Amal Zahira binti Muhammad Ahirul Nizam.
Assalamualaikum warahmatullahi wabarakatuh. My name is Afika Nabila, and outline for this presentations. First, to determine the process of purification of non-Sharia compliant securities. Second, to discuss the step for company to be Sharia compliant companies. And the last one is to study the Sharia screening process and the method of Sharia screening by SAC in Malaysia.
Okay, my name is Nur Amal Zahira. Now we will look into introduction to Shariah screening. What is mean by Shariah screening? Okay, process of filtering mixed activities stock into Shariah compliance stocks using a specified method of screening. Shariah screening is conducted to eliminate stocks believed to be unacceptable for investment or Islamic capital market involved in prohibited elements or activities. Okay, example of prohibited things first, gambling. Second, manufacture or sale of non-halal products or related products. Okay, third, which is other activities that are non-permissible according to Sharia. Okay, so I want students with a height between 164 centimeter to 190 centimeter to state in the group telegram for example other activities that are non-permissible according to Sharia. Okay, we continue the introduction to Shariah screening. In Malaysia, the screening process is conducted under the surveillance of Shariah Advisory Council (SAC) of Securities Commission (SC), SAC of SC. Okay, to undertake the Shariah screening process for list companies in Bursa Malaysia with the introduction of 4 activity-based screening benchmark. Okay, the screening benchmark will be explained by the next presenter. Okay, the methodology comprises 2 assessments, quantitative and qualitative assessment. Also will be presented by the next presenter.
Now we go to the key for Sharia compliant companies. Okay, for the company who want to be a Sharia compliant in Bursa Malaysia, it must meet all the key tests given. Okay, firstly, the business of the investor company. The business of the company is important, must be halal and in line with this stage of Sharia. Okay. Then investment in security of any company daily in conventional banking, conventional insurance, alcohol drinking, tobacco, pork production, pornography or related activity is not possible. Is not permissible. Okay, secondly, debt to total asset. Debt to asset ratio should be less than 33%. Debt in this case is classified as any interest borne, any interest bearing debt. Zero compound bond and preference share are both by definition part of debt. Means anything that from interest or commissioner show less than 33%. Okay. Thirdly, non-compliant investment to total asset. It should be 33% less than 33% also. Investment in any non-compliant security should be included for the calculation of this ratio. So an investment with non-compliant Shariah must less than 33%. Okay, then for early, non-compliant income to total revenue. Okay, this part is the purification of non-compliant income. Okay, non-compliant income like income from corruption. Okay, the ratio of non-compliant income to total revenue should be less than 5% and 20%. Total revenue include gross revenue plus any other income earned by the company. This amount is cleansed out of charity. Example, charity at Masjid Baitul Mal as a pro rate ratio of dividend issued by the company. Okay, fifthly, illiquid asset to total asset. The ratio of illiquid asset to total asset shall be at least 20%. Illiquid asset here is defined as any asset that Sharia permits to be traded at value other than the par. If all or certain amount are in liquid form, they cannot to be traded except at par value. And this asset actually the permanent asset and can be traded more than value price. Okay, net liquid asset to share price. The market price per share should be greater than the net liquid asset per share. Calculate as like that. The total asset minus illiquid asset minus total liabilities, and then divide by number of share because the asset is more easy to be liquid.
Okay, now we go to Shariah screening process. Okay, based on the slide, firstly, SC will obtain the financial information from the audited financial statement of public listed companies, and the SSC through the SC continue to review the process of the Shariah status of securities list on the Bursa Malaysia based on that audited financial report of the companies. Okay. This stage is to identify the contribution from prohibited activities, and then SC will compare with Shariah financial benchmark, which that has been taken by the SSC, and then SC will tabulate the result to SSC for the final um, for the final consideration, and after that with the result that has been approved by the SSC, it will issue the list of Shariah compliant securities, and normally the result will be announced on May or November every year.
Okay, for this slide, there are two Sharia screening, two type of Sharia screening. There are previous and revised Sharia screening. The previous one is no longer used nowadays. So in the previous Sharia screening, to identify it, there are two stages in previous Sharia screening. On the first stage, the company SC will look to the level in the first stage. The SC will look to the level of the contribution interest that received by the company that issued the securities. They will look to the contribution interest that received by companies from conventional fixed deposits, and SSC also will focus on the company activities, whether the activities have non-permissible activities or permissible activities. If their company have non-permissible activities, they will classify as Sharia non-compliant. But in Malaysia, there are mixed companies that have non-permissible and permissible. So the mixed companies will go to the second stage, which is the second stage will involve the qualitative assessment and quantitative assessment. Okay, if you look at this slide, these are the activities that are non-permissible for the companies if they want to classify as Sharia compliant securities. Okay, first is gambling, gaming. Second, interest. Number 3 is conventional insurance. After that, manufacture, sale of non-halal or related product. Number 5 is entertainment not permissible. And number 6 is manufacture of or sale of tobacco-based product or related to it. And the last one is stockbroking, share trading in Shariah non-compliant securities. Okay, for this slide, I want students in this class who have uh, F in their name to give example to give example for the non-permissible activities. And I repeat, the student that have F in their name, please give example to these activities. Okay, for this slide, this is the second stage of the previous Sharia screening. Okay, in this stage, the mixed company, only the mixed company will go to the second stage. How we know is this? It's a mix. It's a company that has mixed activities. Apa the SSC will analysis the company and including the subsidiary and associate, which is syarikat bersekutu dia dengan anak syarikat dia. Dia akan analisis, SSC ni akan analisis syarikat ni dalam-dalam untuk dia tahu apa aktiviti yang dijalankan oleh syarikat tersebut. Jika syarikat tersebut ada non-permissible activities and permissible activities, dia akan melalui second stage ni. Okay, in the second stage ni dia will involve two assessment, which is qualitative and quantitative assessment. Okay, SSC ni SSC will measure the level of contributions of the mixed activities from the company. They will calculate the contribution of non-permissible activities and they will compare it to the benchmark that established by the SSC by ijtihad. If the calculate if the contributions of if the level of contributions exceed the benchmark, they will classify as Sharia non-compliant companies. But if the contribution is below from the benchmark, the company will classify as the Sharia compliant securities companies. Okay, and the qualitative assessment, it is a good image and okay, for this slide, it is the list from the benchmark that are established by SSC based on ijtihad. Okay, there are 4 benchmark, which is 5%, 10%, 20%, and 25%. Okay, for 5% benchmark, it's from its contribution from the activities that are clearly prohibited, such as riba, gambling, liquor, and pork. It should not exist from 5%. And number 2, 10% benchmark. It's from activities uh, apa, interest income from fixed deposit in conventional bank, tobacco activities, related activities, um, and others. It's activities that have element of umum balwa, which is element that difficult to avoid. Okay, and for 20% benchmark, it's from contribution from rental payment of Shariah non-compliant activities such as rental payment from the premise that involve in gambling, sale of liquor, sale of pork, conventional bank. For example, like the company have a building, then they rent it to the uh, to the someone who will sell alcohol or pork like that. And for 25% benchmark, it's for activities that are generally permissible according to Shariah, and have an element of maslahah, like hotel, resort operation, share trading, and others. Okay, for this slide, I will explain about revised Shariah screening. Okay, after 13 years, the screening methodology has been revised by adopting two tiers in quantitative assessment, which apply business activity benchmark and the newly introduced financial ratio benchmark. And they maintain the qualitative assessment. Okay. On 2012, they made an announcement to adopt the reverse Shariah screening methodology, and it effective from November 2013. And for revised Shariah screening, the list of the company will be announced in May and November. And it's not like the previous Shariah screening. In previous Shariah screening, they have two stage, and in the second stage, barulah ada qualitative assessment and quantitative assessment. But in revised Shariah screening, uh, there are no stage, and all company will undergo the same process. And the quantitative assessment, the quantitative assessment have a business activity benchmark and financial ratio activities benchmark. Okay. Okay, for the next slide, we will see the different of Shariah screening, the different of revised and previous Shariah screening. Okay, in this slide, you will see the difference of previous Shariah screening method and the revised Shariah screening method. Okay, in the previous Shariah screening method, uh, there are two stages. But in the revised Shariah screening method, there are no stage, and it's no longer used in the revised screening. But in the in the second stage, in the previous Shariah screening, it involved the quantitative and the qualitative assessment. But in the revised Shariah screening, it's dia terus menggunakan proses dia terus kepada quantitative assessment and qualitative assessment. But in the revised Shariah screening, the quantitative assessment, in the first tier, the benchmark have been reduced to two. Previously, in the previous Shariah screening, there are four benchmark, but in the revised Shariah screening there are only two benchmark, which is 5% and 20%. And the second tier, they will see the financial ratio. Okay, the financial ratio, Miss Alia Suhada uh, will give the example of explanations for you to understand very clearly. Uh, okay, so we continue. In this table also, we see that the qualitative assessment between these two method is remain. There are no change, which is image of company and maslahah. Okay, the different are only on the quantitative assessment and the process up to yes, that's only. Okay, if you look at this slide, you will see the list of newly classified of Shariah compliant securities in November 2020, and the newly classified as Shariah non-compliant securities in November 2020. I tried to search for May 2021, but I cannot found it. So I found the latest one, which is November 2020. There are many companies that are classified as Shariah compliant securities on like you can see on the table, and the beside of that, you will see the newly classified as Shariah non-compliant securities. There are 16 companies that classify as Shariah non-compliant securities. This is the example of companies that issue the security to the SAC.
Okay, now we go to the method of Shariah screening by SC in Malaysia. For the company who want to be a Shariah compliant company, they need to go through these two methods. Firstly, qualitative assessment, and secondly, quantitative assessment. Okay, Miss Afika was explained about this before, so I just want to give an example to you all for more clear about this. Okay, you all can refer to the slide. Okay, first, the company need have a good image. Okay, for example, at Extern Corporation Company, which is together cooperate with government to help community with program Perumahan Rakyat Termiskin (PPRT). So that is can give a good image for this company. And also, the company needs can give a good benefit to others people, such as to the Muslim people. Okay, have we know umum balwa is something difficult to avoid. Okay, for example, from what I read from Berita Awani about DNA picked at a Cadbury chocolate. Okay, according from the fatwa, for this situation is difficult to avoid because the product was originally is halal, but after inspecting is only a part of it. Okay, next we go to the quantitative assessment. Quantitative assessment, which is based on the percent benchmark from activity company and from financial from statement company. Okay, this is from group income and profit before tax. Okay, for this we can know the level of the company about the non activity non-activity halal in the company. Okay, there are two tier for this method, which is business activity and financial. Right from the first tier, which is a business activity, actually it is a from the activity of the company that is not Sharia compliant to the company's profit before tax in determining the Sharia status of the security on Bursa Malaysia. Okay. As a result of the revised benchmark, there is a percentage ratio that has been given, which is 5% and 20%. Okay, firstly, from we look at slide 5% activity clearly prohibited by Islam, and there are obvious conventional elements. Okay, for example, conventional banking, conventional insurance, gambling, pork, and other else. And for 20% are activity that have element of Sharia non-compliant, even a little like hotel, resort, share trading. We don't know for hotels. For example, we don't know what inside maybe have a bar, so we don't know what a little prohibited at there. Now we go to the how to calculate each company that want to be a Sharia compliant company. Before that, in calculation the benchmark of business activity, the important information from the company financial statement is firstly total income and secondly profit before tax. Okay, for example, at slide in this situation, the main core activity of the Sidin Berhad is plantation and investment. And there are two subsidiaries, or in Malay we call anak syarikat, which is Adam Sidin Berhad and Sally Sidin Berhad. These two companies do the main activity, each with tobacco business, Adam Sidin Berhad and Sally Sidin Berhad milk activity business. Okay, step 1, we have to know the information about total income and profit before tax before every this group company, from statement company every 6 years. Then we have to know which is the TO, which is total asset, and PBT, profit before tax, from amount of permissible activity. And from this situation, clear that Adam Sidin Berhad runs tobacco activity for main business. Next, let's recalculate this situation together. Please take yours calculate. I hope we can calculate together to find out if this company pass or not to be Sharia compliant company. Okay, from the data just now, we need highlight the amount of TO Adam Sidin Berhad, which is 55,000 over total income, which is 1 million from Sidin Berhad, and the total just multiply of to 100% to get the percentage of the benchmark if this company pass or not. And for the result to total income, we get 5.5%. Okay, so they are more than 5% from the benchmark. Okay, for the we go to the profit before tax for the percent. For this question, I want girls from this class to answer this calculation. Please respond in group Telegram. Okay, so so that we know that answer for the result quantitative, this company is non-compliant because the benchmark is more than 5%. For second tier financial ratio, SAC focus on benchmark for cash flow from conventional and debt flow from conventional financial only, and from Islam instrument will be included from the calculation. Okay, by using the formula at the slide. Formula cash or debt from conventional instrument over total asset. Okay, then multiply to 100 to know the percentage. The calculation result must be less than 33% to pass the Shariah stock examination process. It is important to avoid usually an illegal element in a company financial business statement. Next, this slide is example of financial ratio for cash conventional. Okay, from the slide, this is a Amazon company financial statement. We have firstly we have to know what is amount of cash from conventional, and then we have need to know total asset from this company. After that, we need to enter the amount in the formula given. If we look at the existing information, the quantitative result for this company is less than 33%, which is 24.54% benchmark. So this company is Sharia compliant. Then we go to the example of financial ratio of bearing debt. Okay, for this, it is same as a conventional cash. At a company statement, if there are interest debt need to plus with debt instrument conventional, and then minus Sharia compliant financing, then divide by total asset and then multiply at 100. Okay, this is the formula. Okay, we can look at for example at the slide. At company B situation, there are information from the company report about the conventional debt. After know the debt, there has a conventional element at there. So we just need to over the total asset of the company, and to know the benchmark, just multiply to 100. Okay, we just take the debt from conventional. Okay, and then so the result we can look, the company is non-compliant of the debt because the benchmark is more than 33%, which is 33.3%. So they are non-compliant.
Okay, for the next slide, fit justification for Sharia benchmark. Okay, for this slide, I will explain about the basic for establish of benchmark and how SSC take the value of every different percentage of the benchmark. Okay, for basic establish on mixed companies must be sure the status of the company as Sharia compliant. Okay, is this necessary to grow up a specific benchmark to ensure that prohibited element a minimum and related to a law by Sharia? Okay, if you guys see status of mixed companies, Ibn Subki in Al-Ashbah wa Al-Nazair, that is to rule as prohibited something that is a mix of the permissible and the prohibited is ihtiyat and it is not necessarily prohibited. Okay, ihtiyat means place the percentage as a precautionary measure. Okay, so next SSC of SC to into accounts other fit principle to other dia case. Okay, first point is maslahah. Okay, what is mean by maslahah? Okay, maslahah basically maslahah is a description of gaining benefits and avoiding harm. Okay, umum balwa is a okay, second is umum balwa. Umum balwa is not way to legalize what is haram and forbid what is halal. It is a realization that when something is difficult to avoid, then we take the easiest stance or easiest way. Okay, we see how some things are forgivable because it is difficult to avoid them. Okay, such as like 2 little splashes of urine that cannot be seen when it touch to your body or your clothes. Whether uh, whether like muhafafah, mughalazah atau mutawasitah. Okay. Um, third, has min asalib iktisadia, which is costume that are in form economic. And lastly, fasadu zaman, the damage past. Okay, we continue to the next slide. Okay, you guys can refer to the slide. Ibn Qayyim, who wrote in his book Bada'i al-Fawaid about the nature of prohibited property, which is of 2 kinds or 2 groups. Okay, for the first point is prohibited due to other reasons such as the means or way it is earned or acquired. Okay, for this point have to example. For the first one is money in itself is okay, but the manner it is acquired such as by robbery is not acceptable. Okay, for second example is shares of companies are by nature acceptable, but share of business companies may not be acceptable. Okay, the example like gambling, non-halal product, okay, like that. Okay, for the second point, prohibited because of its side. Okay, the example like pork, liquors are same of alcohol. Okay, hence of mixing of meat slaughtered by Muslim and non-halal kitab is prohibited. Okay, for the next slides, benchmark for mixed company 50% rule. Okay, utilize the fatwa concerning silk mixed with common thread. Okay, this is based on the hadith of the Prophet sallallahu alaihi wasallam. Okay, first, the Prophet sallallahu alaihi wasallam took a piece of silk and placed it on his right. He took some gold and placed it on his left. Okay, then he said, both these things are prohibited unto men among my followers, but permissible for the women. Okay, which is this hadith story about a man cannot wear these both things. Okay, while women can. Okay, second, if it is poor silk, then it is prohibited for men to wear the silk clothes, but if the clothes is mixed with 50% less silk and the remaining common thread permissible. Okay, the man prohibited to wear the silk clothes unless the silk clothes 50%, unless the clothes are 50% less silk. Okay, next, 1/3 rule. Okay, utilize the analogy of hibah, gift, where a person can bequeath a maximum of 1/3 of his property as gift to an unrelated person. Okay, the example like one company have a Shariah compliant products and the other products is prohibited, like non-halal product. Okay, so if the company want to clean the property, they have to give 1/3% rule to 1/3% rule as a hibah or gift to an unrelated person. Okay, next, benchmark based on Robnu Fahish, extraordinary margin or profit or gain. Okay, describe gain through cheating and manipulation tanajush. Okay, the company you gain the property by cheating and manipulation. Okay, Ghabnu Fahish accompanied with Tanajus is not permissible. Okay, Hanafi Mazhab ruled that the upper limit for Ghabnu Fahish are as follows. Have three. First, 5% for ordinary goods. Second, 10% for animal use for riding. And lastly, 20% for fixed assets.
Okay, now we go to the process purification of non-Sharia compliant securities. Okay, for the greater reason, sometimes the Sharia compliant company security may change status to non-compliant. So they need of a purification. Okay, what is purification? Purification is the removal of any impure return income search from non-permissible business activity or interest revenues. Okay, what if required for us to make if we have buy investment which is original Sharia compliant, and then after the audit process, the the security are changed to non-Sharia. Okay, for example, this situation, I buy the share of company A at price 20 cent per share. At the time when the company originally Sharia compliant, then suddenly a new list came out from the SAC stating, and then the share of company A were removed from the list of Sharia compliant shares. So, what must I do? Okay, okay, okay. So, we need the process of purification. Okay, firstly, the investor should sell the security if the respective market price more or equal to investment cost. So, for the example, the situation before this, if the investor needs sell the security from non-compliant, if the share price more than the cost. Okay, secondly, any dividend received up to date or before the announcement of the capital gains arising from the sale are lawful to be kept. And for the number 3, any dividend and capital gains received after the announcement are considered unlawful and should be disposed for charity like masjid, like Baitul Mal. Okay, this is just for amount of dividend. Okay, for example, from situation, I buy 20 cent per share, but the share price had gone up and the current price was suddenly 45 cent. But at the time the security changed to non-compliant, so I just need to take 20 cent per share only, and the baki we should go to charity. Okay. For the investor are allowed to hold their investment in share non-compliant security if the market price of the said securities is below the investment cost. Okay, the investment cost may include brokerage cost or other related transaction cost. For example, people want to buy at company B share at price 30 cent, which was originally Sharia compliant. Suddenly, after announcement, company B were removed from Sharia compliant. At the same time, the price dropped to 10 cent per share, so the investor can hold. Okay, next, the 5. The investor are also permitted to keep the dividend received during the holding period until the market value of the security equal the investment cost. At this stage, the security should be disposed so investor can sell if the market price high at the time.
Okay, for the conclusions. In the conclusion of this presentation, we will know the difference of previous Shariah screening and the revised Shariah screening. We can identify the Shariah screening methodology, and we also know about the newly introduced financial ratio benchmark and the determination of value benchmark. Refer on the opinion of the Islamic jurists modern according to the same method like maslahah, umum balwa, and others. And there are also way for company that classify as a non-Shariah compliant security. There are always a way for the companies to be Shariah compliant security using the process of the purifications explained by Miss Alia Suhada. That's all from us. Thank you. Thank you for your attention and Selamat Hari Raya.